Let's take a look at how all of the indices are. Actually, they're getting a little negative now. When we came out about 2 minutes ago, we're hoping they'd go positive. In fact, they've come down about another 20 points, but nothing compared to where they were earlier in the day. All of the indices, as you can see, are down. But again, it looked much worse earlier. Well, when the bell rings, the action begins right here. We are about to get some big earnings reports from corporate America. Disney and Blue Nile about to report. We're going to break in with that news as soon as we have it here.
And speaking of corporate America, Ralph Nader is here to explain why he thinks corporations are actually hurting the U.S. economy. I can't wait to hear you do this interview.
Well, you know what?
Really interesting.
Milton Friedman has some things in common with Ralph Nader, believe it or not. We're going to explore that territory. But first, we're going to tell you what drove the markets today with today's data down low. Global worries. Political turmoil in Greece sent stocks lower, but they did end well off the session lows. Dow's was down about 190 points in earlier trading. Consumer discretionary and financials were the worst performers, while utilities outperformed. The Dow has now fallen for 5 straight days. Gold tumbling today, dropping more than 2% as the dollar rallied. The commodity fell $34.60 to end at just above $1,604 an ounce to be exact. It was the lowest settle since January 3rd, the first trading day of the year. And oil fell for the 5th straight session, ending at $97 and a penny.
Wow.
The lowest settle since February 6th. The commodity's now fallen more than 8% in just the last 5 days. Melissa.
That is quite a story. We've got Larry Shover in the pits of the CME. Sandra Smith is also walking the floor, looking at commodity prices. Huge story there today. Ryan Dietrich is bullish on stocks despite today's sell-off. He actually likes housing right now, too. Can't wait to get to that one. Adam Shapiro is ready to break in with all of those earnings numbers just as soon as we get them. Larry, let me start with you at the CME. Did you have to take Dramamine to get through today's market? What a wild ride.
Yeah. Very wild ride, but this is like a classic example of a market that's just convicted with a dearth of information. There's really nothing out there. You think the left coalition in Greece coming out saying, hey, we might privatize the banks, we might negate all the IMF, EU rules, and this is what happens.
You don't think that was a big deal? That's a big deal.
That's a huge deal, no doubt about it, but nothing is solidified yet. There's still a lot more that has to happen, and the market just reacted such, dropped early this morning. People realize there's more to the story than just that. There's more that has to happen, and we see this rally that's behind me right now.
All right, let's go to Sandy, who is also at the CME right now. Sandy, I want to talk about gold. Gold dropping precipitously, almost 40 points, close to that $1,500 range an ounce. I think the most important thing that happened there was William Dudley, the head of the Federal Reserve of New York. He is not known as a hawk. That is, he's a little more soft on inflation, but he came out really tough in a speech in Zurich in which he said Fed's policies to purchase assets, quote, will not continue the moment it looks like it may be generating inflation. Was that what made the market so bearish on gold today?
And then what happens, David? The dollar goes up and all the commodities go down. David, that definitely played a part in today's trading session. But you also have to understand that there's this so-called flight to safety into the U.S. dollar right now. You've got gold prices down as a result of not just the strengthening of the U.S. dollar, but you could also make it the argument that it's the weakening euro. As all this uncertainty plays out, as Larry just touched on, this is not a certain situation. This is a very uncertain situation. David, I don't have to tell you twice, these markets do not like uncertainty. That's what's causing all this volatility. So definitely traders trading in their gold for a U.S. dollar today. That was a big trade.
Okay, let's bring in Ryan Dietrich, Senior Technical Strategist for Schaefer's Investment Research. Ryan, I think it's really interesting that you are bullish because of 3 key factors that you're looking at. Tell us about those. I know they start with mutual fund flows.
Well, that's exactly right. At Schaefer's, we've been bullish for a while, and the main reason is we still think, even though we've had this good price action overall, I know the last 5 days we sold off, overall sentiment's still way too low. We look at investor sentiment polls. They're still way too low, still not nearly as many bulls as we see at major peaks. And you talk about mutual fund flows. We've just had 10 consecutive weeks of equity mutual fund outflows. Now, I know, again, the last week has been rough, but some of those weeks going into that, pretty good price action. So, again, there's just a lot of people, there's too much skepticism in our opinion, all in all, And we've been seeing this for a while now. The individual investor simply does not trust this market. And USA Today had a really nice article yesterday talking about the small guy, how they simply, 4 years after getting burned, they still don't want to touch stocks. We've been seeing that for going on 3 years now. And for that reason, expectations are lowered. We still look at the economy. The credit markets are really doing well. Look at junk bonds continue to do well. Shows the risk appetite still there. We still think, you want to lean to the upside here.
But if the little guy is bearish, what do you think? He's an idiot? Is that your theory? I mean, you're saying he's very bearish, so you're bullish.
Well, that's exactly right. I wouldn't say he's an idiot, but I do think there is definitely something to being a contrarian indicator. Again, we've been seeing that for a few years now. And not just the little guy. Look at hedge funds. Hedge funds overall, a lot of the work we do with options tell us the hedge funds really have missed a lot of this rally. And that's why we think any and all pullbacks will be short, violent, and sweet, like we've seen the last 5 days. Then those hedge funds institutions, which have missed a lot of this rally so far the last 6 months,
the bottom line is here, you do
keep a bid and keep the market up.
Because of your views, because you think that the market is overall bearish, that the general masses out there are overall bearish, you think there will not be then the pullback that we saw last year and the year before when people became too optimistic, too bullish on the market, and then got really scared and pulled back dramatically. We won't have that dramatic pullback in May through August. Is that what you're saying?
That's exactly right, David. Again, the last 2 years we had those scary pullbacks, peaked in late April. Again, we've kind of peaked in late April, early May this time, so everyone's concerned. But all in all, we still think the expectations are a little too low this time.
By the way, just to support your point,
may go away. We think contrarian indicator there.
Ryan, to support your point, there is a lot of data that is backing up the fact that the market and the economy may be a little stronger than some of the unemployment figures and others suggest. Bank lending, for example, the Federal Reserve had some very good news on bank lending, which is that it was up pretty significantly in the first several months of this year, right?
That's exactly right. I mean, what's been the best indicator, we think, for the overall economy going on the last 5 years? It's been the credit markets. The credit markets stopped working before the financial crisis. Then they started kicking into full gear again early 2009, mid-2009. Now we've had this little lull in the economic data. But again, credit markets, banks are lending. The junk bond market is very strong. We think credit markets are working, and that should lead the economy stronger the second half of the year.
Ryan, I'm so sorry to interrupt you, but we have to go to Adam Shapiro because he has breaking earnings news right now on Blue Nile. Tell me how it came in. I think we were looking for a consensus of 6 cents. Is that right?
Right, and it came in at 1 cent. Ooh. They missed on earnings per share, but then on revenue coming in at $83.1 million. Now, I haven't gotten to go into the report just yet, Melissa, but this is a miss on earnings per share. And as you were talking about in the build-up to the 4 p.m. hour, they've been missing for quite a bit. They're not having a good time of it, these diamond sellers.
Yeah, no. Let's go over to Larry Shover for some reaction right here. You were looking for 6 cents as well, I believe. This is pretty disappointing.
Very disappointing. Keep in mind, they've walked down this consensus for months, especially in the last month. And so for them to miss, I mean, this is a great chance for them to regroup, rebound, and say, here we are, we're going to get our story straight. But down to 1 cent, this is a disaster right now for the stock. And most analysts are saying it's a hold. To me, that's code for sell. I wouldn't touch the stock right now.
All right, and Sandy, Nile was really praying that this was going to be a great earnings quarter so that they could go on another. I mean, they were more bullish perhaps than they should. They were doing just the opposite of what Apple does, which is to talk down their earnings report before it came out.
I was going to say, I mean, that's contrary to everything we've seen so far this quarter. Companies really lowering those expectations so they could not only jump over them, but leave a big space above there. And this is quite the opposite scenario that they're providing for traders out there. And I think, David, in an environment where all we've been seeing is a lot of companies beating expectations, this is going to be a tough one for investors to digest.
Hey, Larry, I mean, this is especially disappointing because we're looking at Tiffany's, which had a good report last week. And they even talked about strong demand. So it's not even like Blue Nile can go out there and say the consumer isn't feeling confident, they're not buying any nice jewelry. When Tiffany said exactly the opposite, what would be your first question on the call?
Yeah, the first question is, well, what are we doing wrong? You're exactly correct. Tiffany's was beating expectations this quarter and last quarter. So what are we doing wrong? What do we need to regroup and get back into this upper end wholesale diamond market?
And Ryan, let me go back to you because generally I agree with you that the whole economy is poised to take off. They've been so beaten down with new regulations, with the threat of new taxes, with Obamacare, et cetera, that they're waiting for a trigger to pounce. But then when you get any kind of bad news, you see this sort of market reaction. Would you say that because you think we are going to jump eventually that this is a buy here, or would you stay clear of a stock like Blue Nile?
Particularly on Blue Nile, because again, it's had that weak price action. And I know also there's been some optimistic sentiment on it. Look at the analysts. The analysts actually are more bullish Blue Nile. So to me, a stock that's going lower amongst, amongst optimism is something that I personally would avoid here.
Yeah, Larry, what about you? I mean, pretty much the same question. Is there anything they could say on the call, or maybe, is there anything that revenue number at first glance looks like it's possibly a beat? Is there anything they could do to make you feel like this stock is a buy?
I don't think there's anything they could do right now except for maybe not tell the truth for me to want to buy the stock right now. I would just wait and see. If you have it, I would sell it.
Ryan, we want some picks from you. I know that you're big on Whole Foods, and frankly, who isn't right now? But you're also big on Lennar. Why do you think Lennar housing might come back?
Well, that's exactly right here. When you look at the overall consumer, we still think the consumer is strong. So for that reason, we like housing, we like retail, and specifically when you dive in there.
What signs do you see in housing? I can understand Whole Foods. They're selling like there's no tomorrow. They're opening new stores everywhere. They're packed. But what gives you any optimism about housing?
Well, the main thing that we like about housing, the stocks have been extremely strong since the October lows. And what do we see in the options market? A lot of skepticism, a lot of put buying. So there's bearish bets as the stocks go higher, also increasing the short interest. In other words, again, more bearish bets. We love to see stocks that go higher amongst that skepticism. That negativity in our view on any positive news can unwind, call it a short unwind or bearish unwind. And the shares can just go that much higher, that much faster. And we still think housing's been a favorite sector of ours for a while. We still think for the remainder of this year, it's a really nice area because of the lowered expectations.
Sandra, I can't let you go without asking you about oil, down another 54 cents today. It's down better than 10% in the past 5 trading sessions. A lot of this has to do with slower economic growth. What are traders saying where the bottom is in the oil market right now, or is it in free fall?
Well, it's funny because, Melissa, actually in late day trading, we saw oil come well off of its session lows. I talked to a lot of traders who were saying, hey, guess what? You're going to start to get buyers that step back in at these levels, considering the bullish fundamentals that put oil above $100 in the first place haven't really gone away altogether. So then you have Saudi Arabia, who came out and said today, oil prices are still too high, indicating that they're going to continue to pump. All this is playing out in that market right now. I'll tell you, Melissa, in late day trading, we really came back late in the day, and there's some speculation that maybe we're going to start to see some buying at that $95, $96 level in crude oil.
Okay, by the way, we do have Disney just about to report. As soon as that happens, we're actually expecting them before we were expecting Blue Nile. So they are putting on delay, but again, after the Avengers, one is expecting a lot from Disney today.
Just a ton of breaking news here as the market is closing. Thanks to Ryan Dietrich, Sandra Smith. Larry, we're going to see you in a few minutes for the close of S&P futures.
And coming up, consumer advocate Ralph Nader is demanding dividends from